Hi there. We have now chapter 10 here, plant assets, natural resources, and intangible assets. So I think this is a good time to recap where we are in the big woods of financial accounting. Okay, so we began financial accounting talking about the accounting equation, which is assets equals liabilities and equity. And actually, we've seen that this is a relationship within the balance sheet. Okay, then within the balance sheet, we know that we have in a classified balance sheet, we have current assets. We have long-term investments, PP&E, intangible, and others. And under the liability and equity part, we have current and long-term liabilities and equity. Right, meaning on the assets, there are two types of assets. One is current, the other is non-current. Likewise, in liabilities, we have current and non-current or long-term liabilities. And under the current assets, we've seen cash and cash equivalents. In chapter 8, we've seen short-term investments. We didn't study much, but slightly have seen some examples of short-term investments. We've seen accounts receivables in chapter 9. We've seen inventory in chapter 6, right? And prepaid assets and the like, we have a little bit more of current assets, but yeah. And then long-term investments. Actually, we studied in chapter, I think it's 16. And PP&E is the topic in chapter 10. Also together with intangible assets and others, right? So this is where we are. Current assets, chapter 11, long-term assets, chapter, I think, 15, equity, chapter 12 to chapter 14, okay? And then with chapter 17, discussing cash flow statements, and chapter 18, discussing financial statement analysis, that's the entire topics in principles of accounting. Okay, where are we? We are in chapter 10. And in chapter 10, what kind of items are we going to study? First of all, PP&E. Under PP&E, the items that we can think of is are land. This is too little spaces. We can think of land, PP&E, right? P, property, plant, and equipment. Land improvements, such as parking lot, driveway, and the like. Building, right? PP&E, equipment. right? These are typical items that you can find from companies' books. Of course, there can be others based on companies' own specific situations, such as vehicles, right? All right. Then what would be biggest issue when it comes to PP&E? Can we distinguish these four into two different groups? Land and the others. What am I talking about? It is about depreciation. Does land depreciate? Does earth depreciate? Maybe over billions of years, but land actually does not depreciate. So when it comes to PP&E, except for land, depreciation is a major issue, and we'll mostly talk about this depreciation or depletion. Depreciation of PP&Es or depletion of natural resources. Okay, that's our big picture. And in this video, what I want to emphasize is the historical acquisition costing principle, so-called historical costing principle. This states that your PP&E should be valued at its acquisition cost. That is, you should maintain the historical acquisition cost but as we all agree, PP&E, except for the land, depreciates little by little. Therefore, you should separate it out into an account called accumulated depreciation. And then, in the end, you report to the investors the PP&E net value after subtracting the accumulated depreciation. Okay, that said, then how do we calculate the acquisition cost? Well, we can talk about each of the items, but the rule of the thumb is you should include every single cost that incurs to utilize the PP&E. Let's have a look at an example. From your textbook, chapter end. On March 1st, 2020, Westmoreland Company acquired real estate on which it planned to construct a small office building. The company paid $75,000 in cash. An old warehouse on the property was raised at a cost of $8,600. The salvaged materials were sold for $1,700. Additional expenditures before construction began included $1,100 attorney's fee for work concerning the land purchase, $5,000 real estate broker's fee, $7,800 architect's fee, and $14,000 to put in driveways and a parking lot. Determine the amount to be reported as the cost of land. B, each cost not used in Part A indicate the account to be debited. Okay, the first one asks us the cost of land, acquisition cost of the land. Okay, but this sounds awkward, as we've seen something like architect's fee. Is there any room for an architect to play in the purchase of the land? Ooh, not so much, right? Architects are mostly about building, right? So this should be part of the building cost. For 10,000 to put in driveways and a parking lot. Ooh, again, they are part of, do you remember? Yes, land improvements, right? And they depreciate, unlike the land. So they are different from land. So they should be separately identified, included in the land improvements is the buildings. But all the others, real estate brokers fee, attorney's fee, the cost to raise the old warehouse, to use the land in the end, they are all necessary costs to utilize the land. Therefore, they all will be included in your acquisition cost of the land, in addition to this $75,000. One good piece of news is the salvaged material. We can save some cost by selling the salvaged material at $1,700. That is, let's wrap up. You're gonna report land on the debit side, and the amount is gonna be $75,000 cash. Together with okay. Together with, this is better, right? The cost to raise the old warehouse, $8,600, but we can save some cost by selling the salvaged material, and additional expenditure for attorney's fee and real estate broker's fee. That's it, right? Should be 75,000 plus 8,600 minus 1,700 plus 1,100 plus 5,000, 88,000, right? And then B, we can say that on the debit side, architect's fee, which is part of building. How much was it? 7,800, and land improvements. 14,000 paid by cash, maybe, right? 800. 109,800 is paid by cash, right? Okay, we've seen the important acquisition, historical costing principle in accounting for PP&E, and also saw that depreciation is an important topic when it comes to PP&E. In the next video, let's see some of the allowed methods for PP&E. Okay, see you there.